All right. Welcome in, welcome in. We are going to jump through the dailies here, keeping it very simple. This is the daily system. Now we have to separate systems from strategies because I think a lot of times we are missing the how this works. The first thing that you want to do to jump through the dailies here is get a system that actually works for you. And then from there, you can build a strategy. So let's go over this. This is the daily strategy. It's very simple. We're going to break it down and go through here. So you see we're on the daily chart here, and this is how this works. Very simple. What we're looking for on the daily are the daily buy zones, right? And that really comes down to one thing. That is when the daily money crosses over the zero line and becomes positive. This enters into a zone where we create a live long scenario, and once that reaches its max and has its wave 2 pullback, we go into the short scenarios, which are here. Now when we line these up, you can see right here, this is what we have. This lines up there. This is our short. Now this is the breakdown of the areas that we want to be trading longs here. The reason why we use the daily is because the daily is the strongest momentum, gives us the best opportunity for our long positions, and then also allows us to have the biggest waves. So when you work on time frames, the bigger the time frame, that's where the bigger traders trade. Bigger traders trade on higher time frames because they're looking for bigger pushes. You can see down here we have the wave 1 on our momentum on the money, our moon indicator, and wave 2 on our moon indicator, looking for a wave 3. Okay, here same scenario. We have the push up. This is going to be wave 1 that pushes up. Wave 2 is the pullback. It doesn't have a bounce. It continues to go down, which is okay, and that just kind of leads across. Now the steps of this is very simple. The wave 1 on your daily is as soon as the value crosses over the zero line, it's going to create the momentum we need to start looking for long positions. Then we will look for the wave 2, which is the pullback, and then the possible wave 3. If the wave 3 does not come in, then we know that we're going to continue with the short position, which is just the wave 1 in the downside. As you can see here, once we had the volume break the zero on the daily, we push up. That's what we call a long zone. It's a very simple zone that we trade long. Once it breaks down, we know what it's supposed to do, which is basically pull down to a 50% area and then bounce up. You can see here it had a small little area where it decided it tried to create a wave 2 here. But what happened is that the push up failed to create, and we ended up with a blue moon. You can see down here in the moon indicator where we ended up getting a blue moon instead of a bounce. And that failure to create, and what I'm talking about is right here, right where that red is. When that blue moon came in, that let us know right away. See the blue moon right here? When the blue moon came in right there on our money indicator, you can see that that's letting us know right here that we have a bigger pullback than normal. So when this bounce happened here, we are aware that we're not getting volume or cash here, and that would be our instinct to go to where we say, if we know what's going to happen and what is supposed to happen doesn't happen, then we know what will happen, which basically means if we're not getting a 2 pullback that's going to bounce into a big 3 wave, which is right here. We didn't get that 3 wave bounce that we were looking for right here. Instead, we saw the money disappear on our money indicator, which let us know that the proper is to go the other direction, right? Which is the down wave and down 1. So that's how easy it is for us to understand where we're trading. So we want to focus here on the system, which is the daily system. So the daily system shows you where the biggest longs are, right, which is during the daily chart. And the strategies are going to break down later are going to be what we call the 4-hour strategy, the 2-hour strategy, and the 45-minute strategy. These are all trades that work with inside of these trading zones or these positive zones, right? So right now this is the breakdown of the daily. So here's the daily breaks up. We have our wave 1, and then on its way down, it pulls back. It fails on a wave 3 push up, which allows us to take advantage of a giant pullback. As you can see here, we get our big pullback, and we know there's no money, right? The only indicator that you need, right? Let's go to the moon indicator. Is this indicator. There's supposed to be a wave 3 indicator here that pushes up in volume. We don't have that, which means that once we see this blue line, right, and it pushes up to this top, that's the last peak of what's going to happen for the long. And then from here is where we start shorting down. We would start shorting the position from this area right here. This would be the start of the downside of this position by allowing the moon indicator to guide us on volume. See how the blue line starts to spin down? Once we see that, this would put the area that we would enter into a short position. And I'm going to show you what that looks like on the main chart up above. As you can see, that would have basically told you that on this candle right here, where we have the yellow line right there, that would have been where you take advantage of the short position, right? And let's take a look at it again. See the blue line breaking down here? So it pushes up for its last momentum push. Then the next move is down on the daily. That confirms that we're losing money in volume. And then we'd use that section, that candle, to go up to the top, find what the chart looks like at that time. And we can see that at that time, it was creating a candle here for its last push up right here. And this is where we would basically take advantage of the short position right here. See, so this would be the top that we would be looking for, creating the down position, which you can see right here. We would be shorting from that position. You see how this arrow lines up with that? So that's a way to understand when the blue line crosses up and starts to head down, that is the time to find the candle to find your downward entry. Okay, so now once that happens, that creates the daily downtrend, right? Which is this red box. So now that we have the money gone, we can see here on the daily downtrend from this point right here, we are now moving into a short position, right? So as we start to move down, we notice that we do not get our bounce, right? This is a small wave 3 bounce. It doesn't go up as much as it should. It's a tiny little bounce. You can see wave 2 pulled back like it's supposed to. Wave 3 was very minimal, and now we go into the downward trend, right? So here you can see you have all this opportunity to make a short position. And the best part about this is once it breaks past the negative, you can hold this position because you know that the only way that it's going to go the other direction or a long position is when you have a green moon. So you can see here on this downward movement here, we can short down. It bounces up here. There's always going to be bounces on the way down because there's always what's called limit orders and people buying on support and resistance from Fibonacci lines, bull flags, bear flags, et cetera. And people have buying positions. And this is where people lose most of their money because they're buying in limit orders, putting them on positions of Fibonacci lines for support and resistance that don't always normally hold their position. So as we can see here, we would just track the money. We go down, it pushes up. You see right here where wave 2 bounces, there's actually no area here that there would be what's called a green moon, right? So you see right here, there's no place that the moon would actually hit. So we don't have to worry about a green moon causing a big spike. So then we allow that to do its bounce and continue down. Now this also becomes an area where you can look at this and say that, you know, there is no possible green moon, so you're not going to see a big spike there. But when you see the wave starting to bend up right there, you can close your short depending on, so like I said, depending on your strategy. If you're higher leverage, lower leverage, that would depend whether you close on this move up on the wave 2 bounce or you hold your position. But either way, there is a second position that is open to another short, which comes in on this next move here, which is where wave 2 bounces and then starts to head back down again, which is right here. Now we're going to draw an arrow from here, from that bounce, to see where it actually shows a position on the upper side. So let's take a look at where this is taking you, you can see right here that on this bounce, it gives you another opportunity to grab another short position and then continue on this downward movement right here. So here's another top that you could have took and then entered into a downward position on that wave 2 bounce, right? Now, if you're in up here, you're probably not going to worry about this bounce at all because you can see there's no possibility of a green moon, which would be slowing down your downward momentum. And normally we expect a downward move to have a bounce and then continue down to its bigger move to its downward side as we see happened here. Okay. Now, the beauty of that is very simple, is that that's a normal short position. And then when we pull back to our wave here, we can see, fix that real quick. We can see when this bounce happens, right? And this bounce is coming after our 1, 2, 3. So we have a 1 pullback, a 2 is a bounce, and 3 is the final pullback. Once that happens, that pretty much takes you through the 1, 2, 3 step, right? Well, 1, 2, 3 step is basically this, is that once it pulls back to 1, there's always going to be support and resistance. And then if it breaks through on the next pullback, that's pretty going to much eliminate all the bad investors who had the wrong limit orders put on the wrong support lines. And that's going to create a massive pullback to where it's going to break through all the bottoms. Once that happens, that pretty much puts you in a position where you can say that you have reached what's called the floor, right? Or the lowest pullback that's possible at that time. And now you're going to be doing what's called the work back, which is where it works up, comes back, and kind of works through. Now, because there's no money, right? Because we're working on the lower side of the daily on the moon on our money tracker, right? This area right here, even though there's a lot of movement to the upside, it doesn't mean it's going to create a lot of actual movement in the price, right? And that's just because that there's no money here. There's no money here, then there's no movement. The only time we have money is when we get above this 0 line and we're in the section over here where we have green or candles that are actually moving on the upside. So we know that even though this is moving up, they're not above this section here. So they're not actual moves that have volume behind them. So more than likely, they're not going to be that productive. Okay. So that's why we use the money tracker, because money is the only reason a coin will go up. And the money has to be above this line here in order to make a move that is the safest, risk-free, higher reward, less risk plays are going to be once the money builds back up to those levels. So here we can see that the pull down has bring us to a section where we have hit a floor. So what I'm going to do here is I'm going to show you that once this hits the floor and it moves up, I'm going to put this candle here and I'm going to make this candle blue because that is a floor candle, right? So now I'm going to go to the regular scenario here, right? And I'm going to put this blue across here and say, okay, this is showing that an area that has a lot of exhaustedness or has hit a lower level of a floor type situation. Now, the thing about this is that this is where a lot of traders, when they see such a huge pullback, will say to themselves that we have a floor position right here. So they'll start looking for what we have, which is called entries on this level here of support and resistance, right? And that is a lot of times the plays that come in with the Fibonacci's being on the 2 below the 0.5, etc., below the golden pocket. And it also, kind of simulates an area that has a higher probability of being the lowest point of an area. The thing is that since we have an indicator that lets us know that money is the only thing that matters, when we see this floor hit, we know that it can go even lower because we know that the money that's going to circulate from here doesn't mean a big move in price. So you see how this wave 1 moves up here, and this is the push to volume right here. And then we have wave 2 where it pushes down, and then we have a wave 3 which basically creates the next bigger movement of money, right? All that happens in the lower area of money. So when we see it on the chart, we can see that from this area here, there is a momentum that pushes up, okay? That's where we see this block right here, where we do see the momentum give us this area here of particular trading, right? You can see where the first movement here, where the floor happened, there was a giant spike, right? And the reason why there was a bigger spike on this blue arrow here is because what we call retail investors or uneducated traders have basically thought that that was the floor area, and that was probably the area that had the most limit orders placed already previously, which caused this bigger spike to happen here. Now, once that spike happens there, you're going to get the philosophies of how people trade to start to kick in. And one of the philosophies is that once you see a higher high, you need to see a higher low. So on that pullback that comes on wave 2 here, you can see down in our money, it goes below the last low, right? So that means that it's still a weak trade, but we know that this isn't the floor because the money hasn't come in to actually change the floor, right? And we'll show you that as we move along. So there's a push up, those are limit orders. Then it drops off because all the people who didn't sell earlier sell the rest of their order right here because there's no money coming in. And it pulls it down even further. Then this area here becomes the next opportunity for what they would consider to be the floor area, right? And then they start to build up, which is a push up, right? Wave 1, there's a push up, there's a pullback. Now in these scenarios, this is a higher low than the previous low, right? Showing some type of reversal. This is to get where retail investors can get sucked into these positions. Now, there are trades here that will make money in long, and there are positions that you can enter here, all based on your strategy, okay? And this is what we'll cover in the next videos, is strategies on how to trade these positions. But right now, what I'm trying to show you is what a system that we use, which is called the daily system, okay? The daily system is where we don't want to be caught in all these different scenarios while there's being bull flags, bear flags, supports. We're seeing all the limit orders break through, higher highs, higher lows, etc., etc. We want to make trades when all the chaos is gone, right? And the reason why we want to make trades when the chaos is gone is simply because we want to have a higher accuracy of success, what we call the law of average. Meaning that if you have a system, okay, and you have a system that has a 1, 2, 3 step, right? Meaning that 1 tells you that a long is incoming. Step 2 confirms that there's a long coming. Step 3 is your entry. So if you have a 1, 2, 3 steps that you follow, and you do those 1, 2, 3 steps the same 10 times in a row, your law of average is this. How many times when you follow those 1, 2, 3 steps does the trade that you get into create a successful result? Okay, meaning that based on your trade, you are winning in a long position, right? And if you use leverage, this is where it's important. Based on your leverage, right, are you getting stop lossed out? How many times out of 10 times do you get stop lossed or liquidated, right? Some of you guys don't even use stop losses. Some of you guys just get liquidated. How many times do you get liquidated, or do you lose 50% of your money, 30 to 50% of your money out of those 10 times? That would be what's called your law of average. So if you're losing your money 5 out of 10 times, your law of average is 5 out of 10. If the trade is hitting your stop loss 5 out of 10 times, your law of average is 5 out of 10, right? That just means that your average on your trades are 5 out of 10. You're 50% on these trades, okay? Now, this can also, now strategies, right, which we'll talk in the next video, will actually teach you how to change your law of average based on your strategies to make up for possible dips like we see here, possible pullbacks that could put you in a stop loss, right? If you have a strategy that's built around your system, even though there's a big pullback to this line here, you might not have got stopped out if you had the correct leverage placed when you entered here, right? All based on your strategy, right? Strategies change your law of average, right? So that's right. Michael, what's up, man? So my voice is going in and out. Is that what's happening? Can you hear me now? Is it clear? So based on your strategy, you can survive a bad entry or not a higher risk entry, right? So if your law of average is 5 out of 10, you could survive this entry if you had the right leverage and right trade strategy placed. So even though it does pull back on you, you could survive that based on your strategy. So this doesn't mean this is a bad trade, but based on your strategy, it could be a bad trade, right? Now, this is just a higher risk trade because winning 5 out of 10 isn't a great probability, right? We like to trade where we're winning more in the 7 out of 10s, and the strategy allows us a higher percent of winning. So our 7 wins are actually equal to 12 wins versus a different strategy that only gives you 5 wins, right? So I'd rather have a 12 winning system than a 5 winning system, right? So depending on your strategy, you might survive this particular trade, right? But going off this, right, and this is what we're going to take a look at, is when you see this push, you have scenarios here that allow you to say, okay, there's a push to a higher high, there's a higher low, and then you see right here that we get to a higher high again, which is right here. And then when that pullback comes, which is right here, this area here, most of retail investors will basically already have their limit orders based on the previous retest that happened here. See these 3 retests? 1, 2, 3. And this is where they enter. Now notice that there was a big pullback after the retail investors entered, right? Because patterns and strategies that you guys are using based on everything that you're being taught on YouTube are very, very low rewards versus risk. Meaning the law of average is 4 out of, an average 4 out of 10 wins. And based on the strategy of how you use leverage, it could be even worse, right? The systems that you're being taught are being taught to you based on a systematic decision that you do not use what's called leverage, and you are simply buying low, selling high. Now, the problem with that is when you do that, you need an actual 10-20% move to happen for you to make any type of money, and you need to have a huge amount of money. Like if you were trading $10,000 and you made 10% in a week, that's not bad because you made $1,000 that week, but you have $10,000 invested to make that 10%. Where had you had $10,000 and you had a good strategy based on a system, you could do a 5x, which means your 10% that you won, which was 1,000, could actually be multiplied 5 times. So you would actually make 50% on your $10,000 trade. So what's better, to make $1,000 or to make $5,000? Right? Of course, you want to make $5,000, risking the same $10,000. This is why you have to have a strategy, and then, well, you have to have a system that you can depend on that has higher winning rates, right? Meaning more wins, less losses, right? So when your law of average has a higher winning rate, that allows you to also increase your strategies to higher levels of payouts, meaning multipliers. Instead of 1% or 10%, you're getting 40, 50, or even 100% back on your money. So this is why a system is important to understand first, and then you can implement strategies into how to make money. So let's move on with this system. And teach you that a system here. Oh yeah, we're going back up on Sol. We're long on Sol right now. We're long on Sol right now. You can put that in the Discord, brother. VC said long on Sol, like ASAP, right now. And you're going to see this because at the end of this video, the system is going to show you that we're going long on Sol since 231. So here we go. All right, not financial advice, just what I'm doing. I'm going long on Sol based on our system. So if you're in the academy or you're in the Making Trading Easy, you'd be going long on Sol since 230, 231 area. And I'm going to show you why once we get through this here. So based on this system, the people that decided to follow the normal higher high, breakout high, pullback entry, they had a huge pullback here. And then depending on their strategy, they probably got stop lossed out here and lost money. And then they didn't get back into the trade that would have gave them the bump that you need here. Right here, this big push here to actually get going. Now, what we do here is, based on the money, we wouldn't get caught in these higher highs or higher lows because we're watching the money here, right? See how this money comes in? So you see how the money where this is at? We have a push up, we have a pullback, then we have another push up. So you see how this volume of money that comes in here on this indicator here? There's a lot of money from here to here that comes in, right? Big movement to the top. But we can see that during that movement, we got a nice little push up here as well. But we also see it bending down, right? So we know the money is ending. So we know that we're taking profits here. Now, the thing is that right here where you guys would make your entry, right? This area here where most of you guys would say, oh, this is the limit order. We wouldn't get caught into that limit order because you can see as we start to move down, something very important here is we have an indicator that tells us there's going to be a blue moon. Now, what a blue moon means is there's going to be a bigger pullback. And then once we go into this green moon here, right? So after having the higher high, higher low, right? And then the pullback to the limit order, we would want the limit order to play through our system, which would be a blue moon telling us there's a lower area that's going to be hit. And then once we get the green moon and we start to move in the upward direction, then we know that we're actually in an area that is a safe, long position, okay? Creating a wave one, right? So that's how we don't get caught in these big pullbacks, is because on the daily, we're letting the daily play out. And what we'd be waiting for here is very simple, right? So when this daily starts to pull back, you can see here how the daily is pulling back. We are waiting for what's called a long buying zone. So where does the long buying zone happen? After we get a green moon, we push up. Once again, this is the area that is negative right here. This is the red area. This is the short area. We are looking for the volume to break a very specific line, which is where the candle becomes positive. You see right there, you see how that daily candle right there is going to the upside there? Let me open that up a little more. You see how the daily candle right there, you see this candle right here? How it's it's not heading down like this candle, it's heading up. All right, see how this candle is down, right? And this candle here is up. See the difference? This candle is on this side, this candle is on that side. Once the candle gets on the right side, which is the positive side, we know that this is the long area, right? So you see this white box that we created here? What we're creating here is that we are now in a long position, right? So now when this candle happens here, we know that at this point, we are now heading up into long positions, right? And I'm going to draw this line up. And you're going to see on the regular chart, we now have the white box, which matches up with the white box we have down below. And now this area here is where we know that we are in safe positions for long moves, okay? So now we don't have to worry about pullbacks or things that are going to be, not as, which have higher risk. we're eliminating the risk by getting into the long daily trading zone. So now that we have this area put together here, we're in a scenario that at this point, we can look for our strategies to get into these trades because now we have an actual move, right? So let's go to this chart. So now you see this white box here, right? We're trading inside this box. This is called the 1, 2, 3, right? Some people call it Elliott waves. We call it the 1, 2, 3 because the only 3 waves I care about is the initial wave 1, which is right here. You see wave 1. See this right here, wave 1. Wave 1 is the initial breakout wave from the floor, right? So you can see here, this was the floor position. We have a breakout. Anytime there's a breakout, there is a wave 2. A wave 2 is simply that the people who bought at the best position on the daily breakout down here are going to take profits or trim at some point because the only reason they bought so low is so that they can take profits, which causes this pullback. Now on this pullback, there are different areas in here that you can take into accountability for the next entry zone, right? See how there's a area here we have marked off, and this will be part of the strategy talk that we go back to. But this just breaks down when you see a pullback, right? Wave 2 right here is a pullback, right? It's going to pull back. And eventually after wave 2 has a pullback, we will go into a third move, which is normally a very simple move. It's normally the biggest move because wave 3, as you can see here, see wave 3 here? Wave 3 is normally the biggest move that happens simply because at this point, it's going to have most traders buying the pullback, most traders realizing that momentum is to the long position, and then most traders who sold on that original move know that there's going to be support and resistance, and they're going to re-enter to make more money on the next move. And there is a common ideology in trading that it will go back to its previous high, right? So this white line here is where I'll make this green, or we'll make it, let's make it green. This line right here is its previous top. So on the pullback, it's going to at least hit that previous top. And then if people FOMO in, we will get a higher move to the top, which would create the complete 3 wave being the biggest move of the move, right? So that's why on that third move, you can be a little more aggressive based on your strategy, which we'll cover in the next video. Because normally that move is going to do one thing. It's going to guarantee you that it's going back to the top of the last high before it pulled back. So you know you have at least that much percentage of making money from the bottom to where you're going. And then if it pushes past that, you can double or even triple that position on that move up. So that right there is the simplicity of understanding what's called a 3-wave process, right? Meaning that wave 1 is the floor push. Wave 2 is a pullback for people trimming and taking profits. And then wave 3 is where you can basically make the amount of money that you want to make on that move, a 1, 2, 3 move. So that is the system, right? The system that we use is very simple. Let's go back to it. When the money, right, on the daily time frame, right? You guys understand what time frames are, right? You go to your daily time frame. When our indicator, the moon indicator, right? You see right here, VCMTE, volume tracker, moon indicator, right? When that moon indicator, with the settings that we have put into it, and when it breaks above and it becomes a positive candle above the 0 line, that means we are now in a trading zone for positive longs, right? Meaning that your best long opportunities are going to come in this position, and the best momentum is going to come in this position. Once that is activated, we now know that we're going to go into, if I don't know if you guys ever heard of Elliott waves, but this is a beginning of wave 1 when that actually happens. When that wave 1 comes to an end, right, and we can see on our moon indicator right here, notice how our money starts to break down, right? You see right here? Let me show you. So going to our moon indicator, I'm going to put see how our money line Let's blow this up so you can understand. When you see the line go sideways, you see there on the daily it went sideways. I'm going to put an arrow here on the sideways. I'm going to make this arrow red, meaning that it's going to go into a pullback. And then on the when it goes sideways again on the wave 2 pullback, you see right here, see how it went sideways right here? I'm going to put a green, or we'll make it orange, an orange arrow stating that this is the time that you would be looking for the next move up. So now that we have the pullback information, because it went sideways, we expect a pullback. We would close our, well, this, like I said, once again, this is based on your strategy, whether you would close this or not. Personally, I would, because you never know how much a pullback is going to take, right? What we do know is that as we're trading inside the system of the long position, pullback should only be 50% of where we started our long. So wherever we started a long, we should see a 50% pullback at that point. That to me is worth selling, because I don't want to give back 50% of my profits based on that move. Now, where we re-enter is the orange line, because just like here where we went sideways here, we went sideways telling us that the money has kind of slowed down. We then sell this position and wait for the normal wave 2 or step 2 pullback, which is trimming of profits. And then once the trimming of profits goes sideways, basically showing us that the candles are starting to level out, then we have an orange arrow here that would say that's where we would enter or start to get our strategy for a long. Now let me put these candles here so that you understand. So this is where the red candle, right, is telling us that we would take a pullback. And this is the orange candle where it says we would start looking for what's called a re-entry to the upside. Now that we have those candles there, let me bounce into the regular chart so that you can see where this is happening, right? So I'm going to open this up. You can see obviously here the red candle right here is showing that at this point, or this candle here, is where you would be looking to take profits, right? Which basically created a line somewhere in here where this would be the area that you would basically say, okay, here is the area that we would take profits. This is the price that we would be taking profits area, because the money has started to disappear. So this price here, Solana at 150, would be where we're taking. Don't forget, we entered Solana down here on the wave 1 entry. So Solana was entered at 129, 130. We're taking profits at the 150 mark, right? And then we have the pullback here. Now, how do you know where the pullback's going to end? Well, unlike what everybody would do here based on your strategies, and like I said, we're not going to go over strategies too much here, but you would have a situation where there's a pullback. You would see that there's arrows here. These arrows are marking an area that is considered a, see how it's showing support here? So you'd be looking at 144 as a support area, right? And then all of a sudden you would see a second arrow, and then you get this massive pullback. You see this big pullback here? This pullback here is panic sellers, which is you never know when panic sellers are going to come in, or it could be the exchanges wiping out long positions that got into early up here with higher leverage and clearing those books out. But either way, I see our orange arrows over here. We don't have an arrow that is basically set up to where it says we're going back into this trade yet, because based on our indicator, there's no money to go back into this trade yet. So we wouldn't even be involved in any of these trades early, because those are trap trades. Bull flat, bat traps, bear traps, all that other trap, right? What we would be doing here is that these are limit orders that are coming in here. And you can see that once this support comes across, there's a bigger dip here, and you can see people with limit orders fill these orders in this area, which caused this spike here, right? You see that spike that came there? See this spike to the top of this next candle, right? You see that? That caused a spike to this section here. Now the weird thing is that this is where most of you guys would say, oh, you're going to FOMO in here because you think it's going back up. And as you FOMO in, notice what happens to your position based on your strategy is it does what? It has an entire pullback right here. You see that? This is where you guys get caught in these secondary pullbacks that wipe out your profits. Does that make sense? Hit ones in the chat if that makes sense. Right? So you buy here because you think you're getting a bounce, and then you get wiped out because you didn't check the indicator for the money. The reason why we use the indicator for the money is so that we don't get caught in all this bullshit, right? So now that pullback happened and most retail investors, get beat up a little there, we come back, and then, like I said, you might, if your strategy is no leverage and you bought here, you're not losing any money by this pullback because you don't have any stop losses, and this pullback doesn't hurt you because you bought at 144. So it's not that big of a deal if this price pulls back to 141. Okay, it's not that big of a deal if you don't have leverage. If you have low leverage, right? And this is just an example. We're not going to cover strategies here, but I just want to kind of give you an example. So if you got in at this level, this is a 2% pullback. Now, based on your strategy, that could cause a stop loss or it couldn't. If you're doing a 50x and there's a 2% pullback, 50 times 2 is 100%. You lost all your money, right? If you're doing a 10x and there's a 2% pullback, that's a 20% stop loss. So if your stop loss was set at 20%, you just got stop lossed out. Right? So depending on your strategy is depending whether or not you were affected by this last shakeout that they did to get rid of the investors. So like I said, strategies matter, okay? Right? Strategies matter here. That's what it's all about. Strategies matter, right? It's not, all strategies aren't going to lose in this scenario. Now, the reason why our system is designed is because we use higher leverage to make higher amounts of money with smaller moves. And we use higher leverage to basically create a strategy that is less risk, more reward. And in order for that to be successful, we cannot get caught in these trades, right? So our system is designed to basically make sure that we are profitable and that we are getting in after all the chaos is done, right? So like I said, the next video will be based on strategies where this is just a system. So our system says, based on this orange candle here, our system says that right here on this candle is where we would re-enter this position. So we would avoid all this chaos that happened in this area here, because our system says that the money hasn't returned until the orange candle here. Remember, down here we were waiting for the money to go sideways. Based on the money going sideways, this is where we would be entering off this candle. So we wouldn't even be going through this guessing area, or we don't have to worry too much about our strategies in this area because we're not involved in this area here. We're simply waiting for the move to the top so that we can close out of any shorts that we have, or we can get into the next long that we're getting into. So which is what we would have here. So right here, we would be sliding into this position on this candle, and this candle right here is where we would be making our long positions. So our entry would be based on this candle, which more than likely would be something at 147. So we would be re-entering at 147, and that is considered wave 3. Now we know, based on a simple strategy here, right, that the next time this coin goes up, it's going to at least reach its last high, right? Because we're on wave 3, which means it should at least hit its last high position, which is right here. So we know that we can target this position. So from our entry position here to our target position, you can see that that's a 6% move, right? So that's just that. Like I said, we're not going to get too much into strategy, but that's just an understanding of what the market is going to do, so you can understand why you have to have a system that you can follow. And then once you understand the system, you can create strategies on how to make money on this. So if you knew that the next move up from this section here would be 6%, what would be your strategy to make all of it. Funk, buy, hold, end of story, no taxes. All right, Funk. Basically, in the last 3 years, Funk, you have made an average of, let's see, buy, hold, and etc. So what did you, what, give me an example of what you bought. What have you bought? You talking about Bitcoin? Did you buy, where's your dollar cost averaging? All right, so let's give you, okay, BTC. What's the average price you bought BTC? All right. So you've been holding, I mean, if you bought Bitcoin at 7K, that means you've been holding Bitcoin for uh, over 7 years, right? Now, it's easy to say buy, hold, etc., because you've been buying for the last 7 years, right? Where most people are getting into Bitcoin, if they were lucky, they got in at 20,000, 20, 30,000 this last 2 years, right? So and that would be someone that's even early again, right? The average person, ETFs, got in at 40,000, right? So let's average this out. I'm going to go in between. I'm going to say that most people getting into crypto today aren't going to have the opportunity that you have. That's kind of like the guy who gets an IPO and says, "Yeah, guys, just buy and hold." Where you buy Facebook for $14 and they list it on the stock exchange for $60, $70. Of course, buying and holding for you is a great opportunity because you were one of the rare people that got in at 7K, right? So what you have to realize is the current market doesn't allow the same philosophy that you have, which is buy hold. And I'll give you an example. So even on your example, let's say you got 7K, right? So that means right now for Bitcoin, right? So let's say for you got in at 7K. So we know right now you're up 15x, right? Because 10x would be 70,000 and it's 100,000. So we'll say you're up 15x, right? So let's say that everyone bought in at 7K. And I know what you're talking about because we got in earlier than that. But let's say that you have 7K. It's a 15x. Okay. Now, if you were using this simple strategy that we have here, okay, and I'm going to get into a strategy here just real quick so you can understand. So let's just say the move here, okay, and I bought and then give me an ideal of like how much do you have in Bitcoin? Let's do 100K. Let's do this. Let's do 10K. How much did you first buy Bitcoin? 10K, 20K? Give me something. What's an average investor out there, right? 20K, 10K? All right, let's do 10K. All right, let's do 10K just for this example. So let's say you had $10,000, okay? And you got a 15x, right? And let me walk you through this real quick so you can understand. And I understand what you're saying, buy, hold, no taxes. But here you go. So we have 10K, right? And we get a 15x on our 10K, right? So we're up 150,000, right? Now, let's say we take 10K right here. And by using this strategy, you get in 10K and you buy at this level here where you should open and you sell at this level here, right? You see how that has 16%? Now, that 16% is actually going to be at what we do is a 20x leverage, right? So a 10x on that would be 160%. So this is 320%, right? Which means that if you put 10K, let's just do half of it. Let's just do 10x. Let's do a small 10x trade. 160%, right? So at the bottom line, we'll say 160%. So if we had 10,000 in there, that means that was a $15,000 trade, right? Now we're going to take out, let's take out taxes, right? So let's say that that 15,000 is only $10,000. Okay, so we're up $10,000 here. Now, we turn around and we wait for this next trade to come up and we pull back and we use the same system and we get in here at the 147 mark. The minimum that we're looking for is, like I said, is the return to the head, which is 7%. Okay. Now, what that would mean is that on a 10x, that would be 70%. So that would be 7,000. We'll call it 5,000 because we're going to pay taxes. Okay. So now on these two trades that we just did, we took in 10,000 and 5,000. So we have $15,000. Okay. So every single month, right, there is, on these trades, there's an average of 20 of these trades a month. Let's say that you only do 5 of these trades a month. Okay, so 5 trades a month, you make 75K. You only do that 5 months a year. So who's doing better? You bought Bitcoin at 7,000. You're up 150 grand. I did 2 trades a month for an entire year. And I'm up 120% more after taxes. Do you see what I'm talking about? Same $10,000 investment, but I'm up double. Does that make sense? And I like the conversation because, you know, we're talking, I get it when, you know, that's like me telling you to buy and hold XRP because I bought it at 25 cents. Right? I mean, the people who got in Bitcoin at 7K, at the end of the day, it makes sense to buy and hold because right now you're up. But if you would have had my system and did what you did for 7 years, my friend, this is times 7. Here's how much you should have in 7 years. Right? In 7 years, this is where you should be. Because in 7 years, you're up to 150,000. Right? Now, if you did this $15,000 trade, right, once a month, it would be worth 180,000 times 7 years. This is what you should be up. You should be up $1.2 million. You're up 150,000. What's better, 150,000 or 1.2 million? Does that make sense? Funk, does that make sense to you, big dog? That's after taxes, Funk. But like I said, that's strategies, right? This video here is showing you systems, okay? This is called our daily system, right? So on the daily system, it creates these opportunities that you can create a strategy to make 1.2 million in 7 years off Bitcoin, doing 1 trade a month. But you have to build a strategy, right? First, you need a system. So here's the system, okay? All right, I didn't want to get into strategies on this. I just wanted to get into systems because systems is what matters, right? So here's a system, wave 1. We know there's a pullback. We know based on our money there's the entry, and then we get this next move here. Now, very simple. When we go back to our moon indicator, the same scenario here as that we had on our earlier sell. What do we look for? We look for the money to run out. See here on the money wave? Okay. Same scenario. The money goes down and sideways. We sell. Wave 2 pulls back. We get back in when the money goes sideways and starts to move up. We have our wave 3. As soon as wave 3 ends and it starts to come down, that creates the scenario that we would sell. And I'm going to put 2 arrows here. This first arrow here is going to be where the daily went down, and the second red arrow is going to be where the blue line goes down, right? See, we have a blue line here on our moon that once the moon hits, there's a push up and then a come down, right? Now I'm going to go look at both these scenarios, right? So you can understand that on the very first move, this is where we would decide that we would do a sell-off because wave 3 is done, so we'd be selling here. The second opportunity is here, that when it bounces and see that blue wave goes up and it starts to come down, right? That is this area here, which basically is that second bounce, right? Remember, there's always 1, 2, 3, right? So if you don't sell and you kind of miss this first move down right here, right? There's always a bounce that comes, and then that gives you this opportunity here to make sure that you're selling, right? Which is here, right? See how that wave happened there? Gives you an opportunity to sell on this bounce here on that blue wave, right? So that way you're getting out here instead of if you've gone lower, you can see that this is for sure the time of the area that we want to get rid of, right? So it creates this area here that we want to sell. This is the sell zone, right? And then from there, if people see there's a bounce that comes through there, right, for whatever reason, you definitely, if you're shorting this position and you see that you have that first move down, you're always going to want, if you didn't get into the original short here, there's always a bounce that gets you into another short position, and then you have this bounce because people FOMO'd in, they created a double top. See, this is the top, this is the double top. When you see that double top, because you know the money is going down, because you have our indicator, you short this double top like crazy because you know that there's no money and there's going to be a big pullback in this area here, right? That's the system, okay? There's a short from this position, a short from this position, and a short from this position, right? And based on strategies, you know, you can create different scenarios off those shorts that come in. And that's just reality, okay? So those are the opportunities you have based on your, you know, whatever your strategy is, that's where you would take the ability to, you know, short those positions, okay? But a double top right here, definitely, you can see here we have a double top arrow here, letting us know that on that double top, we're definitely taking that short. And you can see on the moon, what do we have? We have wave 1 that creates that first short, we take advantage of. Wave 2, it bounces. When it bounces, we can see that on the bounce right here, right, there is no opportunity for a green moon, right? So we're not going to see a bounce to the upside. So when we see this wave 1 come down and then bounce, we take profits on our short. We watch the bounce happen. We realize there's no green moon, which means what? We don't have to worry about a big bounce, and then we take this third wave short, right? That's how we use the system, okay? Pull back, bounce, and then look for the big pullback. Pull back on the money, bounce, and then when we see there's no possibility of a moon, then we take the bigger short. That's the system, okay? This is what the system teaches us. By having the system, we know where we should be in the daily system, what we can expect or what's happening, or what's called the, I'm 18, I was seeing if you can help me start trading and learn how to do it. Bro, check out, yeah, everybody, I mean, dude, we have our Discord, we have everything in there, the links in the bios, you know, watch the videos on TikTok, we have, you know, places to go, welcome videos, all that stuff, man. Big community, you know, and there's just ways to, like, you know, find what you're doing. It's very easy to do. So here's the double top, here's the pullback. So we know based on our system, we know where the short or the money ended, right? So we know that when the money ended, we were topped out right here, right? So the money ended, we know Solana at 186 was the end of the top, all right? So now, based on your strategies, you can devise shorts that allow you to get profit from these positions because you know where the money ended. And when you know that the money is not coming in, so what's going to happen if the money is not coming in and we're going down? What's going to happen? The coin is going to go down. Until when? Right? Until the daily money, right, starts to cross over here, right? Here, once again, what's our system? Wait for the daily to break above the positive, right? And then start looking for long. So here we go again. The daily breaks above the positive. We start looking for longs again in this position. You can see how the white box is here. Here's your white box. And we start again, same scenario. We look for the wave 1, which is going to be this first move up. Once we get that move up, then we have our pullback, which is the wave 2. Notice here, as it starts to drop in the system, we know there's no money. We can't do anything until the money goes what? Sideways, which happens down here. See how it goes sideways down here? Right? The money goes sideways off of the wave 2 pullback. And then from there, we basically, let's walk through the scenario again. This is a system. All right. If you guys have any questions or anything, you can screenshot that right there. Okay. Now let's go through the system again, right? So what's the system? So in order to go through the system, what I need is our money counter. This is our money system. The money gets above the positive zone. This creates a white box, which is the best trading zone, okay? Wave 1 of the money zone pushes up. That's the breakout. Wave 2 is basically trimming of the profits. Now, just like over here, when did we know that we had a short? When the money got to the top. When did we know we were buying back in on the orange? Remember the money here? Money got to the top, right? We know there's a short. The orange basically is when the money lied out. We knew there was a move to the upside. Same position here. The money gets above the positive. It pushes up. Right here, let's go ahead and put the arrow. We can see the money go sideways. What does that mean? This means that right here, we would be looking for the downward movement on the red arrow. Next move is when the money goes sideways down here. See how it goes down, goes down, goes down. The candles go sideways here. This is the orange candle that we would start looking for the upward movement, right? So now let's go back to this section here. The arrows, let's put the arrows in here. Arrow 1 is where we would start the short. That is red. Arrow 2 is the orange arrow, is where we would start to look for the upward movement. Now let's go back here. Here we go again. What do you see here? The red. What did that mean? Right? That means that we should be shorting from here down. When do we re-enter this? Do we look for support and resistance areas? Do we need to look for this support area right here? Here's the support area, right? Now, this support area actually holds this time. But you see the orange arrow here? The reason why, put in the Discord that I'm live, the reason why we can get in on this entry here is because you see the orange line? This lets us know that this candle is where we're going to enter based on our system. So now we're re-entering on our system based on this candle at 164. And then we're expecting, remember the basics, is that once you get a pullback on a level 1, it is supposed to get back to its original high, right? So you see here, here's your original high position. And if you go across, what did it do? It hit its high position again, right there, you see? So we knew that if we get into this candle right here, we had the opportunity for a push to that area, which is 22%, right? Now, based on your strategy, that's whatever you would do to get to that strategy would be how you would make profit on that move. Now, once that happens, let's go back to the money, right? The only thing that matters. Once we have this move to the top, notice again, the money stops here and starts to go down, right? See this move here? See how it starts to go down there? Right? So wave 1, wave 2, this is considered the wave 3, and I'm going to go ahead and update this real quick. Wave 3, okay? That's the money wave 1, 2, 3, okay? Now, we go back here, we can see based on where the money goes down, right? You can come over here, you can see that that creates an area that you would be looking to take profit in this area because there's going to be a pullback. Now, we go back to our money line. As it starts to level out and starts to make its move to its top here, see right here? It starts to level out. Bing, bing, it starts back up. That creates the next orange line, right? Which is here. Go back to the chart, put your orange line in. Boom. Another entry here, which is basically your long position as you move up here, all the way through that next move until we get what? All right. Let's recap this because this is the system. Okay. Wave 1, right? We see the volume break the 0 line. It pushes up. Wave 2, the pullback until the money goes sideways and starts to move back up. Another entry. Then you see the money get cut off here and starts to go short here. So you trim or take profits on this move depending on your strategy. It comes down. It creates the blue moon. During the blue moon, it shows that there's money coming in, so there's not a big pull down. Remember, the reason why we're trading the daily buy zones is because when there is no money coming in, there is less dips, less wicks, less candles that eliminate your trades, and less pullbacks because the money is on a higher level. The volume of money is bigger, and bigger money doesn't sell as fast as paper hands. So in this particular area, pullbacks won't go as far as you think, and the bounces as they start to move up won't be as hazardous to your health. So remember, the system that we use is to eliminate risk and increase cash. Okay? We're long here. We're long here. We're where we're at, Nikki. We're going, this is a 50x long, right? Let me see where I'm at here. Let me double check my position. So right now we are in a 60% long position on a this is a 500 to a $1,000 trade. We are at a 60x long here. So that's what we were calling out at 231, 232, right? 232.50, right? We're in a long position here. Okay. Now, we're going to get to that trade in a second. So let me break down this system here. So once again, we get positive. The system says we long. Then once the money goes sideways, we short. When it goes back sideways to push up, then we go back here, we're long again. See, orange, long, sideways money, right? We go long. There's the push. Here's another short position. Why? Because the money showed that it's starting to come down. We sell. Once the money comes down and starts to head back up on the orange line, you see the orange line? It starts to head back up. That creates another buy signal there, right? Now, at this point, all these positions here, once you re-enter, your position is to hold for a particular move, right? So once we enter here, even though these positions are coming down and bouncing up, we don't have any sells in this position because once we enter a trade, we have a stop loss and a target. So we wouldn't stop our trades on these moves down. But if you're someone looking to get in and you miss this trade, you would then use this as another, and I'm going to turn these yellow. You would use these as the next entry. So there was a pullback and an entry. Then this pullback came, and then you had another entry position here. And then during that, you had another pullback and another entry here. So if you didn't catch the original trade that you were supposed to right here, you had an opportunity right here, an opportunity right here, and an opportunity right here, right? So all these opportunities are happening for you to take advantage. And let's go up here and I can show you what I mean by that. So here's your trades. Here's another opportunity for a long position. Here's another opportunity for a long position. And here's another opportunity for a long position, right? All before the big move that exploded for us, which finished the trade that we were currently in. And then right here, you can see that once it comes down, right, to this section here, you see this. Let me open this up a little more. Once our system gets to our trade and we get to the levels that we had a move that created income, you can see right here when this starts to come down, this is where we would decide to get out of this trade because we're at a certain level of profits. So now when I put this arrow here, I'll show you what I mean. So now let's go here. So now, based off all these entries that you could have made, which was here, 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 right? Then you see that big move up to the top there, right? You can see that this is where we would be looking to close out of our position on our moon right here, right? Now, depending on your strategy, depending on which trade you got in here, whether you got in on that first orange, which is right here, or the second time, which is this orange right here. You see this orange right here? I'll make this orange. This is your entry orange right there. You see? Here's an entry on this candle. And then you had another entry on this candle. Then you had another entry on this candle. And then you had another entry on this candle, right? So either or, let's go with this higher entry position. Once we see our move to where we're looking for, which is that, 10, 15, 20% move, this is actually a 27% gain. Once we get to those areas and we see that the money, right? Let's go back to the money. Where you show me the money, right? So once we see that that money has now pushed up, right? Because notice, see the blue line? You see how we have a blue line here and it's going sideways? We wouldn't consider this a downward position until that blue line actually headed down, right? So if this blue line would eventually started to head down, right? That would basically put us in a position where we're probably going to get stop lossed out. Or if a blue line is happening at any time here, we'd be turning into what turned into this green moon here, right? So that's where knowing that you're trading with moons, right? Because you see how the orange line is trying to create a moon, right? What happens when our system hits a moon, right? When our system hits a moon, we get a spike, right? So when we're in this blue moon here, right? You see how this blue moon is? And we're moving to the top there. We are looking for this moon to actually happen because that is going to create the spike we want. So we want that moon. It didn't happen there. It didn't happen here. And then it finally happened here. You see that? And that is the spike that we got up here. Now, that spike is what we wanted to happen. And since the moon hit, we know that that's the end of our trade because there is no more money. The volume and the money has now basically been exhausted on the daily system. So we don't, there's only so much money that can go into, where it's supposed to be, right? So once we get that spike, we know that that's our moon, right? And that's pretty much where we end out. Now, what happens here? Once again, we get a top, and then we get notice here on our blue line, right? Our blue line comes up, it's pushing, and we get the sell signal here. As we come across, we finally get the blue moon here, and then right here is where we would start shorting. So you can see the red box starts here because this is where the blue line starts to go down, okay? Which means all your spikes are done. But also what happened here is what? You got a top and then you got a double top. What do you do on a double top? You go down, right? So this is systematic trading, guys, at its best. You're not going to find a better system. You're not going to find a better, opportunity to show you how to use the system. This is very simple, very easy to follow, plug and play. You can't mess this up. You have one indicator that tells you when to buy, all right? One indicator that tells you when to sell, okay? It's that simple. When to buy, when to sell, right? That's it. When to buy, when to sell. And if you're following the daily system, then you know what's supposed to happen. When you have a sell signal, you wait for the blue line to start to come down, which creates the higher percentage of the red box area, which is here, right? You see the red box is here, and I'll put the box down here so you can understand what I'm saying. When the blue arm starts to head down, it's actually here, which would create the red box. And you can see the red box matches up here, right? See that red box match right there? That is the highest percentage of down and the lowest risk trade that you can make. If you were following the double tops, then you would have been making trades a little bit higher, because you would have noticed the double top came, and you would have noticed that on our money line right here, the money line is starting to head down, which means what? We're heading towards a blue moon. So you could have took a short in this position here at a higher level at about 237. If you waited for the red blue moon to kick in, then you would took a short more in the position around here, about 223. Okay, but either way, depending on, once again, your strategy, you can make the same amount of money or even more by being patient and waiting for the confirmation or safety trade versus the double top trade. So the people that made money here, they got in super early because they traded the short on the double top. But if you trade down here, you can use a different strategy that will give you twice as much money by trading properly off of the correct, more patient trade from here down. And like I said, that will be based on the videos that we make after this, which is called strategy videos, right? What we're focusing on here is the system video here that allows you to see that when you use the system, the daily system, you know when the best, safest longs are, and you know when the safest shorts are, and then you just move from that position, right? So now let's get back to where we are currently, which is nice. We have now moved to this section here. Now notice here, here's your red zone, right? And just like any system, when you see the waves start to happen, right, which is here, you can see that we have a sell which goes into wave one, right, which is this here. We're going to see a pullback that comes down, right? And then we're going to see a bounce, which is wave two, which is going to be here. There's going to be a bounce, a spike, right? And when that spike happens, the next big pull down, wave three, or the next pull down that happens is over here. Now, the thing about this pull down here is that sometimes you get that big wave down, and then it goes into the next position, which would be working off here, would be basically the bounce or the long, right? Now, the thing about this wave two, it's actually pushing into our next white box, right? So you see right here? You see how that candle is slightly below? So our next daily candle, right? Our next daily candle, which would be this candle here, right? Which would be the next one they print here. This next daily candle right here should be on the upper side right here. We should see it right here. It should print, right? Instead of print there, it should print here, meaning that we are moving into a long position based off this candle, which would be here. So our prediction for Solana is going to be that this next move here, this bounce that's happening, is going to create the next long position right here, which is currently where we see we're headed up here. Is that next move here is where we're looking for Solana to become the next move, meaning that, correct that somewhere in this position here, that Solana's sitting at the 226 area, 232 area, which is up here. is that in this area here, that this would become a buy zone right here for the next long position. Now, normally, just like our average, okay, this is where we talk about the law of average. Normally, when we go into a buy zone area, which is the daily white zone, we average 10%, right? So which means that if we average this zone here, we would be looking at Solana to move at least 10%, right? Which oddly, if you go back to the previous high, right, is this position here, right? And then that is how we can look and go, okay, where Solana is today, we can expect an 8% move from its current position once it moves into the white box. So that could basically take us to an easy 253 up to a 257 area. And then if it does what it's supposed to do, which is normally wave 3 is normally a little bit higher, we can see a 15% move, which means we have a target for Solana that sits at 268 up to a 20% move, which is basically 280. So these are the targets that we're looking for on this next Solana move. So the long that we are taking here is going to allow us to get these positions here. The 253 is definitely one we're going to hit. That's the main target. And then FOMO and everything, depending on the volume of how much money is left in the market, you know, how high we push, we could easily see 257, 268. And, you know, the normal push would be 280, right? So that's kind of where we're going to leave this here because we're going to follow up on this video and see where we go. But that's why we're calling along at 232 and 231 is because we are entering the money, right? You see how that money right there? We can see that we're entering a money trade into the next daily long position, which is our buy zone for our white box. Okay, so guys, this is what we call a system. Okay, systems are basically allows you to know what's happening and when the best low risk opportunities of trading is. And then once you have the low risk down, that allows your strategies to then be more productive and have a better law of average of being winning, right? So this is how to use your daily strategy to know when you're trading long, right? Don't forget during this wave 1, we should have some sort of pullback, right? Which would be when the money goes sideways, right? So somewhere down here, we're going to have a, you know, if we get what we want. Now, this is going to be a short month in October. Normally, just so you understand that in October, we normally have a shorter month because our trading cycle ends like October 25th, and then people start taking profits for Halloween. So normally here, this would be wave 1. We would see a wave 2 pullback, and then we would get a bounce and we would get some type of move there. So I expect for October, we're going to push up for the first couple weeks. We'll push up for wave 1. We'll then have a normal pullback on a wave 2. And then we'll see that final rally push from October 15th to the 25th, 10 days. And then after that, we're going into a pullback, which will take the volume way down below. And then we'll see a huge pullback in December or November and December as we start to just chip away at all the gains that were made. And hopefully the ETFs hold our positions better with the ETFs in there. But normally, you know, professional traders know that the fourth quarter is more about profit making and products. And since crypto doesn't make any products and it doesn't have a P&L, it doesn't have any residual income. So ETFs are probably going to tell their customers to sell in November and December and take profits and prepare for, or, you know, if they say that depending on their tax brackets, some of it might be just selling 20 to 30% to take profits. And so then when the pullbacks come, the losses will basically offset taxes and put them in a position where they're making money by losing, right? Depending on how much money they have. Sometimes losing is winning, guys, right? So we don't know what that's going to look like, but that's what we see to come in the next month is a push here. Wave one is normally its big breakout push. Wave two pulls back at least 50% of from the original breakout, and then wave three will basically head right back to its original, the last top that it had, whatever it is. That we know for sure. And then depending on what day that is, if it's October 25th, we can see a pullback from that position. And then that would go into the 2 months of pullbacks for Black Friday, Christmas, holidays, before we get to any positions of returning to the other direction, which normally happens after New Year. So, somewhere in the January 5th area, guys. Okay, but this is the system that we're doing, guys. I'm going to close out this video for the Discord. This is the daily system to know where we're at. Currently here, we're waiting for the long position to come in, which is the next daily candle. If it prints above and it's positive, right, which we're thinking it's going to be, then we're going to enter our long scenario where we close out October in starting October 3rd, starting with the long positions moving up. And then once that kind of tops out, we're going to follow our system. We're going to look for our money to go sideways. We're going to sell. And then on the orange, when the money goes sideways again, we're going to take that third wave up. And then when that happens, we're going to close out with our sell again. And yeah. And if it bends up again and the money starts to head up again, then we'll take another position and then we'll ride that out. So like I said, this is the system. This is how our money trading system works. If you're interested in the money trading system, guys, you can look at the information on TikTok. There are links there all over our page to find us, how to get a hold of us, how to contact us and ask questions. But this is for the Discord. This is called the daily system, the system that the students, right? So if you're in the Discord, go ahead, hit ones in the chat. Hit ones in the chat if you're in the Discord. This is the student daily system. This is the system that we want to be calling out. If you're in the US, here's some information for you. And you want to get yourself in a position where this is what you're saying inside of the Discord is that the daily system is operating in a positive long, right? So right now we're currently waiting on the next daily candle to give us our long position, letting us know that this is where we're going to start going long. So the way we're looking at it right now is it's holding a 232 level on Solana. That would be considered, with the daily coming up, we'd be looking for that to be the entry point that we want to get into, a 232. All right. But like I said, if you're in the Discord, we're posting. This is the system that we post. This is the daily system. Okay. This is our overall system. This is what we trade by. This is how we find our longs, how we know when the best longs are, when the law of average is in our favor, when our longs will pay off 8 to 10 wins, 8 out of 10 wins, right? This is the system that we follow to trade long and short to have the best low risk, high probability of success trades. This is the system, okay? Now, the next video we make will be called strategies, because they're inside of this system. There are 3 strategies that we will cover, and there will be the daily strategy trade, there will be the 4-hour trade, there will be the 2-hour trade, right? And so you have a daily, a 4-hour, a 2-hour, and the 45-minute student trade. Okay? Those are the 4 strategies for longs. Okay? And with those longs, inside of those longs will be trades for shorts that are available there. So those are the 4 strategies that we're going to cover in the next video, guys. So other than that, good luck, God bless. Let me close out this video and throw it in the Discord for the people. and they can go back and watch it, and we can get everyone on the same page. This is the making